Wow. Have you ever watched the market do a complete 180 in just a few hours? Because that's exactly what happened today. It was, a perfect storm of geopolitical drama and some pretty serious fears about interest rates. So in this explainer, we're going to break down what on earth just happened, and more importantly, what it means for you as a long-term investor. Okay, so before we get into the weeds of the day, I'm actually going to start with the conclusion. This is the single most important takeaway from a day like today, especially if you're a long-term index investor. Honestly, this piece of advice right here, it's the key to navigating the kind of chaos we're about to unpack. So why is that advice so critical today, of all days? Well, the market pulled what we call a classic reversal. It was like a tale of two completely different days all rolled into one. To really get why, we've got to look at two major shocks that hit investors right around lunchtime. I mean, look at this. The day kicked off with so much optimism. The S&P 500 was up almost 0.5%. But then the afternoon hit and everything just fell apart, with all the major indexes finishing in the red. What's so wild is just how fast that mood swung from risk on, where people are buying, to risk off, where everybody is rushing for the exits. And here's the 1-2 punch that caused it. First, you had what people are calling the Warsh shock. Basically, the guy who might be the next head of the Federal Reserve said some things that spooked the market, making everyone think interest rate cuts are off the table for a long, long time. Then, right at the same time, we get the Iran shock. Peace talks suddenly collapse, and boom, fears of a military conflict are back on. So what happens when you get a double dose of bad news like that? Well, you see exactly this. Oil prices jumped almost 3.5%. That's the market pricing in a potential war in the Middle East. At the same time, stocks took a dive, and the 10-year Treasury yield climbed, which is a direct reaction to those interest rate fears. It's a textbook market reaction to uncertainty and fear. But just when you thought the day was over and it was all bad news, the story took a pretty sharp turn. Something totally unexpected happened right after the closing bell. So what was this big plot twist? An indefinite extension to the ceasefire deadline. I mean, on the surface, that sounds fantastic, right? It feels like a huge de-escalation of a crisis that had everyone on edge. You can almost feel the entire market taking a collective sigh of relief. But here's where we gotta pause and think a little deeper. This is the crucial question, really. Does pushing a deadline off into the future actually get rid of the risk, or do we just kick the can down the road? Yeah, the reality is, it's way more complicated. That naval blockade, which is a huge point of tension, is still there. The Iranian military is still on high alert. And maybe the most important thing, Iran's own leadership is completely split on what to do next. So this extension, it feels more like a pause button than a real solution. Okay, so you've got all this stuff swirling around. Fears about the Fed, geopolitical drama, a last-minute plot twist. What is a long-term investor supposed to do with all of this? How do you tell what's just noise and what's a real signal? Let's just walk through a really simple, clear plan you can use to handle days just like this. This is all about ignoring the panic and focusing on what actually matters for your long-term goals. All right, this framework is all about being steady and disciplined. The message is pretty straightforward. For your core positions, your S&P 500 ETFs, you maintain them. You do not sell because of scary headlines. At the same time, you hold on to any hedges you have, like energy stocks, because that risk we talked about hasn't gone away. And this is key. For new money, you wait. There's just too much we don't know right now. All right, so let's look ahead. It's not enough to just react to today's news. We need to know what to watch for tomorrow. What are the key signposts that are going to tell us where the market's really heading next? So, what do the pros think is going to happen? Well, the most likely scenario, at a 45% chance, is that we're just stuck in this tense stalemate for a while. And get this, there's only a 25% chance of a full de-escalation. That's exactly why those hedges we mentioned are still so important. The risk is absolutely not gone. So, the bottom line is, we have a clear checklist of things to watch over the next few weeks. The absolute most important thing is whatever decision comes out of Iran's leadership. But right behind that, we've got the GDP and jobs reports, which the Fed will be watching like a hawk. And, of course, big tech earnings are going to give us a real sense of how healthy the economy actually is. So, what's the real takeaway here? Today's wild ride shows us that even when an immediate crisis seems to be put on hold, the bigger economic and geopolitical risks are still very much there. So the question I'll leave you with is this. When the next crazy headline hits, are you going to react to the noise? Or are you going to stick to your plan and focus on the real signals?